Hey there, welcome to Wealthy Hustlers, the place where future billionaires come to get inspired. As we have all witnessed, the last few decades have been hard on the world's economy. We've been through a lot of recessions, stock market crashes, and the dot-com bubble that took away billions of dollars from the economy. And this isn't it. Hundreds and thousands of people around the globe lose millions of dollars because of the wrong investments they make. See, looking at the history, we can easily figure out that the people who have been winning financially are the ones who invest in the right places. You can be worth $100 million, and you can lose it all in one go if you choose to invest wrongly. To help you avoid that, here's a list of 8 investments you should make to get rich in 2023. On number 1, we have real estate. From an investment perspective, real estate has traditionally been one of the safest long-term investments, not just from a growth standpoint but also to build a safety net for your family. While it is important to build a diverse portfolio with investments across equities, mutual funds, retirement plans, etc., one should close in on a real estate investment as early as possible to enjoy some long-term gains. Real estate also does not require any special skill sets like trading in the stock market, making it relatively simpler as compared to other asset classes. There are many reasons why real estate is still considered one of the hottest investments. Owning real estate provides you with stable rental income every month, long-term appreciation on the property, and it can also serve as collateral to get further. And the best part is, you don't need hundreds of thousands of dollars to get started in real estate. You can invest in real estate investment trusts which help you own a portion of real estate investments. Owning shares in real estate investment trusts will also provide you regular income as dividends. If you want to go all in and invest directly in real estate, you can save up some money to make a down payment on the property and get the rest of the amount as a loan from the bank. On number 2, we have cryptocurrency. Cryptocurrency is digital money that is secured by blockchain technology. Investing in cryptocurrencies is risky, so it's important not to invest more money than you can afford to lose. With that being said, cryptocurrency can also bring the highest return on investment in the coming years. There are a ton of cryptocurrencies, ranging from meme coins like Dogecoin, Shiba Inu, and Baby Dogecoin to utility-based currencies like Bitcoin, Ethereum, and Solana. Cryptocurrencies can also generate passive income through crypto lending, staking, etc. Cryptocurrencies like Bitcoin have also produced whopping 300% returns in 1 year. Yeah, if you had invested $300,000, you'd have ended up with just shy of $1 million. Cryptocurrencies can also be used to send and receive money anonymously. In fact, most of the illegal activities on the dark web are done through cryptocurrency payments. So the sender and the recipient don't reveal their identities. And the best part is the low fee. We know this is a controversial topic as some people consider crypto as a high-fee transaction method. And it also depends on which cryptocurrency you're using to send or receive money. But it can come in handy while sending or receiving money across nations. It's also pretty fast as well. You can send or receive money within a matter of minutes, no matter how big the amount is. 3. Art. Ever seen those huge wall paintings in your rich friend's house? Yeah, those paintings are not just there for the aesthetic. They can be there as an investment as well. Over the years, paintings have been producing amazing returns. Also, let's not dive into how rich people use paintings to avoid taxes. But truly, as much mesmerizing these paintings can be to our eyes, they can also be even more satisfying to our bank balance. The highest selling painting ever was sold for just shy of $500 million. Yeah, $500 million. Sometimes, very intricate painting might not be priced much, whereas a painting with just a splash of white paint can be valued for millions of dollars. You can buy paintings through auctions, dealers, online art sites, and a ton of other sources. Just keep those paintings unharmed and you'll for sure get a huge return on your investment. On number 4, we have intellectual property. Ever wondered how these rappers become so rich? It seems as if they just pull out their millions out of thin air. The magic ingredient in their financial success is intellectual property. Music, shows, texts, software, and even blogs are counted as intellectual property. Intellectual property might not be big physically, but believe it or not, it can generate millions of dollars. Rappers are able to make so much money that a rapper paid out a person's whole tuition fee. All the gold chains, cars, and lavish lifestyles are sponsored by the money they make by owning their intellectual property. On number 5, we have gold and silver. Gold and silver are the investments that are being used for centuries now. For most other commodities, investors judge value based on supply and consumer demand. If you want to invest in coffee beans, for example, you can judge prices by how much coffee people are currently drinking, how tastes are changing, etc. Precious metals are different in that they have relatively low commercial utility. Compared with other metals, there are relatively few consumer or industrial uses for assets like gold and silver. It all depends on your market position and the state of your portfolio. A good rule of thumb is this: buy silver if you're investing for when times are good. This is a semi-predictable speculative asset that can make you some real money. Buy gold if you're investing for when times are bad. Gold can bring you a return of about 11% if you're investing for a longer period of time. However, silver does have much more industrial and commercial use than gold. Approximately half of all silver bought and sold on the market is used commercially, with applications ranging from dentistry to electronics. The price of gold tends to move inversely to the stock market, so the next time you see stocks going down, you will know what you have to do. Our sixth investment is dividend stocks. Dividend stocks distribute a portion of the company's earnings to investors on a regular basis. Most American dividend stocks pay investors a set amount each quarter, and the top ones increase their payouts over time, so investors can build an annuity-like cash flow. This way, the dividend they receive from owning those stocks keeps compounding year after year. Companies that pay dividends tend to be well established, so dividend stocks may also add some stability to your portfolio. That's one reason they're included on our list of low-risk investments. Whether it's through dividend stocks or dividend funds, reinvesting those dividends can greatly enhance your return on investment. Dividends typically increase the return of a stock or dividend fund by a few percentage points. For example, historically the total annual return of the S&P 500 has been, on average, about 2 percentage points higher than the index's annual change in value. The seventh investment on our list is P2P lending. There are a ton of people who are in need of loans, and there are a ton of people who can give out loans. P2P lending just fulfills the needs of both. Generally, banks give out loans, but charge high interests as they gotta make a profit too. But P2P lending just removes the need of a middleman, so the loans are given out at a cheap rate. P2P lending websites connect borrowers directly to lenders. Each website sets the rates and the terms and enables the transaction. Most sites have a wide range of interest rates based on the creditworthiness of the applicant. Just make sure to keep your money safe, as sometimes P2P lending can cause you to lose money. Lastly, we have one of the safest investments, which is fixed deposits and government bonds. Especially in third world countries, banks and government provide a good rate of return on fixed deposits and bonds as the government needs money to grow the country. And as these are indirectly or directly regulated by the government, they can be considered very safe. This is also suitable if you are happy with some returns on your money as long as it is safe, and not looking for something to double your money within 1 year. By purchasing a government bond, you agree to lend the government the specified amount for a limited time. In exchange, the government will issue you a coupon or fixed interest amount at regular intervals. Bonds are fixed income assets. So here you go. We've covered all the 8 best investments you can make to build wealth. We always try our best to help our viewers live a good life financially. We have a ton of videos lined up that you'll soon get to see, and they'll help you level up your finances. We hope you liked this video. If you did, show us your love by liking the video, subscribing to the channel, and commenting on the video topics you'd like us to cover in the future.